Hello and welcome to MarketBeat Monday. The markets might be closed today, but we are here at MarketBeat to help you get ready for a busy week ahead. Joining us for MarketBeat Monday, as always, our MarketBeat analysts Chris Markoch and Thomas Hughes. Guys, thanks for being here on a holiday with us today. I'm so glad for everybody in the comments already. We've got lots of people in the chat. I love to hear that some people are normally working today and don't get to watch, but you actually get to watch today. So I'm so glad that you're here for our live stream. Throw out some stock tickers. There's a lot of names already in the chat. I'll get to as many as I can. If you're joining us for the first time, no, this is a cold look. Chris and Thomas do their best to know what's going on in the market, but a lot of these are first time looks at a stock. They're just going to give a quick analysis of what's going on in the chart and some of the other data on these stocks. But before we get into some of the names in the chat, we're just going to look at some of the big catalysts coming up in the market this week. So Chris, Thomas, what are you guys watching in the week ahead so far?
I think the big things this week are the Fed minutes on Wednesday and then some economic data on Friday. That's the PCE price index is the big thing coming out. That's the Fed's preferred inflation gauge. So we're going to look for it to affirm that inflation is, at least holding steady at this relatively moderate level, not accelerating. If we see some acceleration, that could be bad news for the markets.
Good.
Yeah, it's a pretty quiet week as far as earnings go. I mean, there's a lot of earnings reports, but there's no real headline names except for Walmart on Thursday. That's going to be one that investors are going to be paying attention to because that's going to be a state of the consumer story as well as a tech story. There is a tech angle there, but it's still a state of the. It's going to also be a look at the consumer, specifically that low income consumer and how they're hanging in there.
Yeah, we were watching Walmart for sure. The other thing everyone is watching right now, I feel like that we have to start off this conversation with the software stocks.
Yeah.
Software has just been hit so hard. Starting out with a look at Microsoft, I know a couple people asked about that in the chat already. This stock is down to levels we have not seen in some time. Chris, you are our resident Microsoft expert. So let's talk a little bit about what you think is going on with Microsoft right now.
Well, I think there's I think this is just a case of the market's just taking the sell-off way out of hand. The story with Microsoft has been that they're making such a big commitment to AI. Are they going to fulfill that commitment? Is the demand going to be there? First of all, I think that to me is, I think that's a moot point, and I think Microsoft's already said that on many occasions that they are planning on continuing their CapEx spending. Again, this is part of that whole AI bubble story that I think has been overblown, no pun intended. But I think there's a bigger story with Microsoft. And I actually wrote about this last week, but I think people are mistaking where the bread and butter of their business is, which is still in their core cloud business. The company holds approximately 70% approximately 70% of their intelligent cloud growth, traces back to just the boring stuff. It's the migrations. It's companies moving their stuff off premise onto Microsoft's cloud, and that business isn't going to go away. That's locked in under multi-year contracts. AI is the icing on the cake for Microsoft. I know, Thomas, you framed it really well before we came on. I'm going to let you say that, but I mean, really, I think people are just getting this story wrong with Microsoft.
Right.
I thought it was a buy at a price point higher than where it is now. I certainly think it's a buy at the level it's at now.
Right. Yeah, this thing with the SaaS sell-off, it's to me, it's nuts. It's really counterintuitive. AI is going to disrupt software. AI is software, right? So people are assuming that these AI modelers are going to be able to come and compete with these niche software players like Microsoft or Salesforce or Oracle or whoever, who already has this big advantage and is also already leaning into AI.
Yeah.
So it's like a chicken or the egg kind of thing for me. Sure, AI is going to disrupt software, but I don't think the AI modelers are going to disrupt the software industry the way that people are afraid of. Talking about the spending fear, Oracle is a great example of this. So their debt is ballooning. It topped $100 million this year, but the backlog is also ballooning, and it topped $500 million this year. So yes, Oracle is going to borrow some money to build these data centers, but their contracts, their backlog says that they're going to make a pile of money when they get it finished. So it's just a matter of time for it to happen. There'd be plenty of time for the market to get afraid and to sell off, and just as much time for the market to get its feet back under it and then to advance back to highs and set new highs probably.
I think the big question here is when we're looking at these software stocks, we could pull up countless names right now that are down. And I really want to know which are the software stocks that both of you would be interested in buying on this dip right now, and which are the names in software that you are maybe more cautious about or staying away from right now.
Ones I'm interested in, certainly Oracle, Salesforce are great. Lemonade looks pretty good right now. Let's talk about who else were we talking about last week? Sorry, the names are escaping me.
I've got Salesforce up right now. Thomas, let's just take a look at where this is. I mean, this is down 28% right now. But looking at their earnings, which were just are going to be coming up, do you expect to see the earnings still stay strong for Salesforce?
Oh, I do. I mean, the business shows clear momentum. They're forecasting acceleration. We see the signs of that acceleration building in their internal metrics. Analyst forecasts are pretty low, I think, compared to what the company is saying. I certainly expect the company to continue to fire on all cylinders the way that it has been and provide a catalyst for this market to rebound. Now, talking about analysts and Salesforce and these software stocks, I mean, across the board, these stocks have sold off to levels below the low end of the analyst ranges. So that's indicating a really deep value overextension in these markets. At the same time, institutions have been accumulating these stocks. So they're selling off, but they're down at these cheap levels where analysts see value and institutions are buying. So it's just really a matter of time before like the retail market gets back under its feet or gets feet back under it to come back and help drive these stock prices, back up to their high levels.
I thought that was a really interesting point. I think that to point out for some viewers here too, when we're looking at the software sell-off, one of the things you pointed out is that the ownership, the institutions are still buying. Are we seeing that almost across the board in these software stocks? Are we seeing, it looks like, in recent data that there's more institutions that are buying than selling software stocks right now. Is that true?
Well, right. And the names that I've been covering, Monday.com, ServiceNow, Salesforce, all those enterprise software stocks, they're doing real well as far as institutional buying goes.
Interesting. All right. Well, I think that's good on the software discussion. We talked about a lot of different names. We'll see if any more stock tickers pop up. One person did ask about Lemonade. So we haven't talked about that one much. It might not be as well known of a name in software. So can we do a quick little overview on what that stock is and what you think about that as a buying potential right now? One thing that stands out to me, just looking at the chart for Lemonade, it's listed as a hold from analysts, and there's not a ton of upside with where it's trading at right now. Thoughts on Lemonade?
Right. I actually misspoke a little bit with Lemonade. That's not really a software stock. It's an insurance company, but it is heavily investing in tech and AI. Tech is driving its business. They are expected to report earnings. Right now, we're looking for acceleration on the top and the bottom line and some more clarity on profitability. Profitability is forecast, let's see here, by 2028. So it's looking pretty good. Insurance business has been doing well with increasing numbers of clients and increasing amounts of premiums, but also efficiencies driven by AI. So lots of reasons to think that there'll be a bullish catalyst in this report.
Yeah, I think the stock, Bridget, I just looked at the stock chart a little bit. I mean, to me, this looks like a classic case of the stock just got a little bit ahead of itself. It's up 76% in the last 12 months. So I think it was due to pull back a little bit. From what I'm seeing, it's kind of hitting that oversold level right now. It's not quite there, but it's getting there. Earnings could be the catalyst for it. Unless they really disappoint earnings, this could be a very viable point for it. I think the only thing that, and I'm not even going to say this would necessarily concern me, because this is certainly a stock that you would put in the category of a growth stock. But I mean, investors do need to be concerned about the fact that the company, it's not profitable yet, but they've been narrowing those losses on a year-over-year basis. You want to see that trend continue and see them getting closer to the point where they're going to be reporting positive earnings. But that's nitpicking because the stock is a growth stock, and you're not necessarily expecting it to be profitable at this point, but you want to see it trending in that direction.
Right. Right now the short interest has something to do with the stock price action. Short interest is down off the peak a little bit, but
Okay.
running pretty high around 16%. So certainly enough to like cap the gains and keep the
Right.
market under pressure in the absence of a catalyst.
Yeah.
Good. Another question. So our earnings is coming up very soon for Lemonade. Another stock that we've talked about on the channel before, I think this is even on my Bird Spies watch list, is the Sprouts Farmers Market. This stock has been dropping like
Yeah.
crazy. We've earnings coming up really soon. But let's take a look at this. What are your thoughts on whether this is a buy before earnings comes out?
The market looks like it's overextending.
Yeah.
I mean, it looks like it's got rebound potential, but I mean, we're going to need to want to dig a little bit deeper into why it's down so much. Being a grocery store and not like a software company, there's going to be some other reason besides this, the software um, fear driving the stock lower. Um,
I know there's some analysts are bullish on the fact that the company has announced plans that they're expanding a little bit. They report earnings on Thursday, so I think you're going to want to probably hear more information about that expansion and what that means. But certainly the stock is trading well below analysts' expectation. I think, but it's having a terrible year. The chart is just not good.
Well, right. It looks like it's having some trouble with tepid forecasts and some competition. So again, it looks like the market has reset and overextended. There's some rebound potential, but how much potential there is going to be determined by the results and analyst sentiment.
Yeah, I mean, Thomas, I agree with you that this is grocery, and that tends to be like one of those areas that you say, okay, do you stay away from that? Do you just, if you're looking for an individual stock grocery, you just go Walmart and forget about it? But I think there's probably that sense of the Maha movement, and this could be a play on that too. But the key here for investors is, I think the stock chart looks very interesting where it's at. And I think you're going to want to wait really closely to see what that earnings report says on Thursday, because that could really tip the scales for the company.
Right. So just after looking at the analyst and institutional data, it does look more, excuse me, like this market has overextended, sold off, and overreacted, well below the analyst consensus. Analyst sentiment has been fairly firm. There have been some reductions, but not enough to warrant the 50, 60% price decline. Institutionals are still owning and buying the stock. You can see the volume has risen as the price has retreated. So people are buying the stock at this level. Certainly has rebound potential. Again, it's just a matter of if the catalyst emerges and if it's enough to get the market interested. Because this would be a stock that retail traders probably aren't really watching.
Right.
So even with a catalyst, how much money are we going to attract into this market to get the stock to start moving?
Right.
Yeah. Well, that's a really good look at this one. Interesting name. Thanks for bringing that one up in the chat. We're going to get to some more of the names. There's a lot of different names coming in. Again, I wish I could get to every single one, but we're going to get to as many as we can. We're going to go until about 3:50 or 4:50 Eastern time, just before the hour. We go for just about an hour every day. That's the plan anyway. So let's get to some names here. I want to talk about Rezolve, RZLV. Chris, we can look at that. And then Thomas, I want you to look at this GLW, Corning GLW. This is a different story. We've talked about some stocks that are on a downturn. And so I'm just going to pull up the chart for Corning really quick. This one's up a lot. This one's up 153% in the last year, up 63% in the last 3 months. So it's really seen a good positive trend right now. I did just see a super chat come in. Thank you so much for that. And that is exactly the best way to get a stock talked about. So we're going to talk about HUMA next as well. Let's keep going on. What GLW is? Have you heard of this company before? Why are we seeing so much growth?
It's Corning. I'm sorry, I was looking at the wrong chart for a second. I'm trying to catch up with what you're telling me. So Corning, this is like a materials company. I'm sure they've got a lot of exposure to optical communications. So they're probably getting some boost from the AI, the data center industry. Let's see. Results are showing. Yeah, we got growth and some acceleration, profitability, all playing into with a blue chip company that does dividends and share buybacks. I'm sure part of this package as well, all supporting, the stock price action, providing investors with leverage. Um, right.
I'm looking at the
Right.
analyst price targets on this one, and it does look like it's trading a little bit above the consensus. And the high end range is only 135. So it's basically trading at the highest analyst estimates right now. I feel like that would give me some pause on whether now is the time to be getting into this stock. Curious if anybody in the chat watching right now has seen this name or already has this in their portfolio, because it's grown quite a bit.
Well, right, because what I'm finding deeper as we get into the news is a deal with Meta supports that idea for them supporting the AI infrastructure industry. Meta is going to lean on them for fiber optics and connectivity solutions for their data centers, which plays into that AI bubble story. I'm looking at the chart, very, very robust upswing in the price action, but we have some convergences here, would suggest even if we get a pullback, that'll be a corrective action that sets up the next run higher. In this instance, we would expect to see the stock price action either retest the highs or move up to set new highs. Based on the way that the data center business is unfolding, I would expect to see this company's business continue to grow over the next few quarters, because we really haven't topped out as far as orders for data centers, orders for GPUs, orders for infrastructure materials. Those are all still coming in. So what's going to be playing into Corning's outlook too.
All right, very good. Thomas, you look up HUMA, please. That's our super chat for the day. Thanks again for that one. So look up HUMA next. And then, Chris, which one were you looking at? Rezolve, correct?
You gave me Rezolve AI, yeah.
Yes, this is an interesting name. We've talked about it a few different times. It was down quite a bit, and it seems like it's still on that downtrend, Chris.
Yeah, so for the people that might not be familiar with it, so Rezolve is a company that they're using AI to help sell products directly through digital experiences. So they are kind of the AI agent to Shopify building an online store, and then Rezolve is giving the companies the agents within the store to help sell products. Stock's been beaten down, like you said. It's a pretty ugly chart, especially in the last 3 months and the last month in particular. I think some of that had to do with I'm seeing headlines about the fact that they did a 250 million direct offering, and so the stock sold off on that news. And the question is, whether or not the bottom's in right now. Company is expecting to generate 500 million in annual recurring revenue this year. I'm not seeing earnings data right away. I'm trying to still look for that. But in any case, analysts are bullish on the stock in terms of the consensus price target. Institutions were buying the stock like crazy in the third quarter, not so much last quarter. So I think it'll be interesting to see. I'm not going to say they're selling it sharply, but they haven't really been buying it as much lately. So institutional buying is slowed, but that price target of $11 is tempting. I'm trying to see when they're going to report
earnings. I know that it's not showing up in the MarketBeat tab. I think one thing on the analyst page to point out about Rezolve is we had just last week another a fresh analyst rating of calling it a buy, putting a price target of $12 on this.
Right.
In January, we had an analyst set a target at $14, and this stock is right now trading around $225. Like, that's the upside potential, and analysts seem very bullish on it. But I think that really contrasts with what the institutions are doing. You pointed out, made a great point that at one point they were buying, but still less than 30% of the stock is owned by institutions. So it doesn't seem like they're quite convinced, even though that analyst outlook is still very bullish on the future of this name.
Yeah, I mean, again, I think it's for anybody that's looking for agentic AI. Rezolve already has it. You're going to have a lot of global brands that are looking for it, and so they may be a name that people are going to go to for that. Again, cold look at it, Bridget, but the stock looks tempting. I just wish I could see more around their earnings data to help substantiate that. But
yeah, I think it's a good look at Rezolve. The question mainly was, is now a time to buy? And I think there's definitely risk involved with this name. It's new enough. We've seen that volatility in the stock. But if you are side with analysts, maybe now would be a good buying point.
Just in terms of if you're looking just coldly at the chart, it's not really oversold yet, and it's not showing signs like it's really oversold. It has hit that level where it looks like it might have found a support level, and if that's a base of support, then you could make that argument that it could be ready to move higher. But it's not one that I have a lot of conviction on. Let's just say that.
All right, Chris, thanks for taking a look at that one. I'm going to have you look up Kraken Robotics next. This is a name that we had on the channel. I believe Jeffrey had talked about it. So look at Kraken Robotics really quick to see what that stock has been doing. And that's Kraken. Okay. And then Thomas, let's get to our super chat, HUMA. What have you learned about this company?
Yeah, Humacyte. This is an interesting biopharma. They apparently have a bioengineered vascular repair product off the shelf, which is basically a packaged product for repairing veins and arteries, which sounds really awesome. They're going to go into production. They're in production. They're ramping revenue at the very beginning of a hyper growth phase. It looks like analysts are very bullish on this stock. We've got 8 covering it. Rated a buy, 7 at buy, 1 at sell. That one sell is by Weiss Ratings. Imagine that. And then the price target is assuming a 700% upside at consensus, 200% at the low end. So it sounds really good. Certainly has opportunity to rebound. There's certainly is a catalyst in the works. The chart action looks like the market sell-off is overextended and we're ready for a rebound. Just waiting for that catalyst. It could come with the next earnings report that's due in about 6 weeks. So
this one is really interesting. Thank you for doing the super chat and making sure to bring this to our attention too. I know biotech stocks always come with a risk. I was looking at the FDA events tab, Thomas, to see if there's anything coming up soon that might be a good catalyst for the stock. But this name and the bullishness from analysts is super interesting. We've got a very, very recent price target of $25, which is wild to look at. That would be an almost 2,000% upside on this stock. And that just came out last week. So interesting.
Right. I'm seeing now too, the DOD lawmakers. Yeah. So lawmakers passed a new act that's supportive for the business. They're looking to actually buy these kinds of products. So, I mean, not just for this business, but for other similar businesses. So that is a tailwind for the stock price over time, I would say.
Yeah. And for such a small company, again, this is a very small biotech company. It does have about almost 45% institutional ownership, which is a fairly large percentage for a company of this size. Again, we don't see a lot of tiny companies like this that are doing quite this well with institutions getting interest.
And they've been buying pretty aggressively. It looks like about 3 to 1 over the last 12 months. So, they're buying the stock while it's down at these low levels.
Yeah. Interesting. Would this be a buy for you where it's at right now?
It looks like a speculative buy to me.
Speculative being the key. That's a lot of the names that we're talking about here today. And on that note, Thomas, why don't you look up a couple of the more speculative names too? There's been a couple of questions about Datavault. So DVLT, this is a teeny tiny company we've talked about several times. So we'll get to that one in a minute. Chris, why don't we do the one that you've been looking at?
Yeah, Kraken Robotics. So interesting here again. This is a stock that's just a little above penny stock range. It's at $5.40 right now. So this is a company that they are a Canadian-based company, and they're a robotics manufacturer that focuses on undersea and submersible vehicles. I remember we've talked about this one before. The company's products are in demand. I think one of the interesting angles here is that one of the target audiences for this company is government and defense contractors. And we talked about that before. I believe we've talked about it on Market Beat Mondays too, as we say companies like this, it's going to be that government and defense angle that's going to provide the proof of concept that's going to get it into the commercial sector. And I think that might be the case here. Company doesn't report earnings until April. But one thing I've noticed just looking over the last, four quarters is that, they've managed to come out last quarter with a surprise profit. Let's see here. Sorry, I was looking at the wrong. Yeah, they came up with a. They've been. It's not very much, but they are turning a profit.
Right.
And next year, it looks like they've got very favorable comps in terms of revenue. They're projecting very strong revenue growth in the next 4 quarters. So not a lot of analyst coverage on this right now.
Right.
But I think what we're seeing is I'm not seeing institutional investment, institutional ideas here, but the stock certainly does look like it's been trying to grind higher on this news that revenue is expected to really grow over the next 4 quarters.
So they're seeing some pretty good demand for their product. One of the things that I turned up in my researching is that there's some speculation that they're trying to get a U.S. or a dual listing. So they're going to get up out of the dollar markets, the penny stock markets in Canada, get onto the Toronto Stock Exchange, get a dual listing in the United States, which will help attract more institutional interest, more institutional investors, provide some more visibility into their operations, and just get them some more capital so they can do some more investing and get the growth, growing faster. Also attract some more clients, get some more defense contracts. So certainly like a whole bundle of catalysts in there.
Yeah, I'd love to hear in the comments if anyone actually got that after watching our video, our regular video. We post videos every single day that we prepare ahead of time and do more research on. Those are our regular edited videos that we post Tuesday through Friday and every Sunday here on MarketBeat. I hope you are a subscriber to the channel. If you haven't subscribed yet, please do. It helps us out a lot to get the subscriber count out and get our videos to more people. So thanks again for being here for the live. We've got a lot of names to dive into. Let's keep going. I want to talk about Meta. There's been a couple people who asked about Meta, so you can take a look at that to see if there's any quick update on that, Thomas. All right. And Chris, what are you looking at?
You didn't have me looking at anything.
All right. Well, then we are going to go right to a name that's been popping up a few different times. Riot. I don't even know if I know which one this is. Riot Platforms, IROT.
RIOT, yes.
And are you familiar with the company, Chris?
A little bit. This is the company that they're known and they specialize with the Bitcoin mining. So, as you might expect, the stock's down about 20% in the last month. So I'm just trying to look at right now what I'm seeing on the company.
Yeah. It looks like just looking at earnings from the upcoming earnings date is very soon. It's going to be coming next week. But if I look at what they did last time, it looks like they did much better than expected.
Yeah, they came up with a very surprise earnings beat. They were expected to come in with negative 19 cents a share, and they came up with positive 26 cents per share. Revenue is up, and it's up strongly year over year. So, this is again what would give me a little pause right now is the fact that it's tied in with the Bitcoin mining space. That's
right. I'm looking at the analyst coverage right now, and it does look like it's listed as a buy by 17 analysts, which is a lot covering a smaller company. Again, a 62% upside on the consensus. There's some even higher price targets recently. A recent upgrade at the end of January from $16 to $23. So interesting name. Again, it's a quick, cold look at the company. Is there any reason, I feel like compared to other Bitcoin related companies, this one's actually doing better than some of the other Bitcoin related companies that we've seen in the market?
Yeah, the company is, I think part of it is because this company's in that data center mining, the data center area too. So they build and they operate large scale data centers, and so I think that's part of it, is the fact that they've actually got another revenue stream coming in here, other than the fact that like it's just a Bitcoin miner. So I think that's helping them right now.
Yeah, a good look at that one. Someone did remind me I forgot to look at Datavault. I said we would, and I totally forgot. So DVLT, we'll get to that one next, and then we'll do Meta. DVLT, this is a tiny company. Again, we've talked about it many times on the show before. It's back down below $1 again.
Right.
What's behind all of this volatility? This is a lot of moves in such a short time for this company. Do we ever see it spiking again, Thomas?
Well, so this is still the same story we've been talking about for the last, couple of months since the last earnings report. I think it's going to be the same story at least until the next earnings report, which isn't until the middle of next month. This is a company with a promising business idea. It has some funding and some backing. There's optimism in some of the analyst information. However, it's still very early in the game. It's pretty much pre-revenue, and it's definitely pre-earnings for what its goal is. Within that, there's plenty of execution risk, and what we have are retail investors who are interested in the story, battling it against the short sellers who are looking at a no revenue company. In between that are analysts, where coverage is very tepid. We have two covering the stock, and institutions which have been buying it, but it's very, very tepid. So we've got 0.25% institutional ownership. So very weak support base, very weak analyst coverage to get people to buy the stock and hold it to reduce that volatility. In the meantime, no catalyst for retail traders to want to buy it. Short sellers are piling in, so they're driving that stock price down. And right now, with really no expectation for any kind of like a bullish news in the next report, I would expect to see the stock price stay down and possibly even move lower.
All right, a good look at Datavault, but not good news for those who might be holding the stock already. Definitely one we'll continue to follow and see if that story does ever change. Right now, it's still just an idea, like many of these pre-revenue early companies are, and it could take a while for those ideas to actually take off. Why don't I have you, Thomas? I know you're looking at Meta, so we could do that next. Chris NOK, thanks Chris for another, not our Chris Wilder had a super chat for NOK. So I'll have you look at that one, Chris. And then Thomas, let's look at Meta again. What did you find? Is there anything happening with that stock right now?
Well, Meta stock is in consolidation. They've ramped their AI spending, so there's concerns about that. But when it comes to AI spending, this is the first company to really report the benefits of AI spending, and they've only been building on that since they started doing it a couple of years ago. Right now, they're ramping spending again. They're leaning real hard into their AI and their virtual reality and the glasses. The glasses have been real popular. Sales, I think, tripled. The manufacturers are ramping production. They've been selling out. Word on the street is that AI has kind of won the virtual glasses game. Even if their AI platform isn't seen as the best, the glasses themselves, the product, the hardware is good. So it's just a matter of time to get the software up to speed. Within the stock price, sideways movement, consolidation near record highs, while the analysts are firming sentiment. So coverage is rising. We've got a solid base. They're leading to new highs. Consensus is up versus last month, last quarter, last year at record levels. Institutions are accumulating. So bullish story, bullish outlook, just a matter of time before the market gains some traction and starts moving higher again.
I do want to ask a quick follow-up there, just because I feel like there's for a stock like Meta, quite a bit of volatility in a short time frame, from that low it hit January 20th, and then it spiked back up and then spiked back down again pretty quickly. Was that just all earnings reaction? What's behind that recent last month volatility for the stock?
I think it's a combination of many factors. There's, the fears of the AI bubble. There's the software meltdown. There's the company's own results. There's the goodness of the results offset by the badness of the spending. So there's that near-term headwind, the impact of margins versus the long-term outlook of revenue growth and margin quality. So again, this market, I mean, there's some volatility, but it's just moving around up and down within a range around the moving averages. So to me, that's just consolidation. It's just some day-to-day noise and market movement while the market prepares for its next big move.
All right, great. Thomas, I am going to have you look up Gilt, Gilt. Look up Gilt real quick. And then, Chris, why don't we get to our super chat? And okay.
Wow. Yeah. Nokia. I will admit I'm familiar with the company, but I haven't paid much attention to it for quite a while, because the last time I was looking at this company, they were really just getting out of their handset business, and they were getting into the they were getting into this defense network modernization, and it was uncertain how that was going to play out. Apparently it's playing out pretty well, especially as you have a lot of companies in the United States and the UK, the EU, that are trying to remove or restrict the use of Huawei gear. So the company is finding a niche there in terms of being able to be in that market. I'm trying to look here. I see that the earnings, they delivered a surprise at the end of January. They beat on earnings by about 3 cents a share, which was nice. Not seeing a revenue number for them. Not seeing what they came in terms of revenue, but looks trying to look on their website here. It looks like net sales grew 3% over the year. So it's an interesting stock to look at. Again, I had kind of paid attention to it. They were at the beginning of this turnaround. Stock's trading at a little bit above its consensus target. Let's see here. It's pulling back from what looked like it might have been a little bit of an overextended range, but certainly seems like this one. Let's see here.
I will say
it's pulling back. It's pulling back towards that 20-day moving average, and I think that would be a place where investors could think about jumping right back in on the stock.
Yeah, John in the chat. John, thanks for being here. Thanks for all your support. You watch a lot of our videos. I appreciate it. John says Nokia 6G rollout with NVIDIA. So apparently Nokia is doing something with NVIDIA. But I think that's interesting. If that's true, I don't know. Personally, I haven't looked at it. There's really no institutional ownership. So it's interesting that institutions haven't caught on to anytime there's a partnership with NVIDIA, it feels like the stock gets a nice big boost from that. And so far, institutions aren't buying that yet. 5% ownership is very, very small. So is this just a retail story? What could that story be?
Yeah, what you just said is very interesting to me, because I think one of the reasons why people were probably hesitant about Nokia is, even if there was a story there, it was about a 5G story. And I've heard Jensen Huang already talk about the fact that we were already talking about 6G. And so if they've already got some sort of relationship with Nokia or with NVIDIA, that's great.
Yeah, that's really good news. All right, great conversation on NOK. Yeah. Thank you for that. Chris, I'm going to have you look up SoFi. I know we talk about it a lot, but we've got a few people asking about it. So you can look up SoFi next. And then, Thomas, let's get back to the stock that you're looking at right now. Gilt,
yeah. I think it's pronounced Gilat Satellite Networks. This is an interesting story. They're not making satellite constellations, but they're making all the ground-based equipment and infrastructure to receive those signals. So it seems pretty critical to the growing satellite industry that's emerging. Right now, they're making money. They're expected to grow at a modest double-digit pace for the next few years, expand margins, continue to make money. Institutional interest right now is low, but it's still like in the modest double-digit range. They've been accumulating. Analysts are bullish. They're pointing to upside in this stock. Consensus right now is for 45% upside. So it looks like a good play. I think right now the stock is pulling back based on a valuation concern. The stock price did ramp up really quickly last year. Lots of opportunity for profit taking now. So I think we're just seeing the market kind of correcting back, getting back in alignment with the trends. But I see support at the 150-day moving average. Volume has been rising. MACD is convergent with the latest high. So it looks like the market has got some strength behind it. I would say that it's probably going to retest the $20 high, if not soon, then relatively soon, and potentially move up to set more highs over time.
One thing that I think is interesting is that the pullback is so quick, down over 20% in a really short time frame. The short interest isn't crazy high on this one. What else? Is it just profit taking that we're seeing such a quick pullback in the stock?
A market with not a lot of support. So there's not a lot of analysts. There's not a lot of institutions. Probably not a lot of retail traders either. So when there was time, when there was a peak and a reason for markets or the people to sell and take profits, there just weren't a lot of people left to buy those stocks and to support the price action. So we get an oversized reaction. But that's good for traders now that want to get into this market, because now we're back trading in alignment with these key moving averages, which suggests that we're at least reasonably valued, if not undervalued.
All right, very good. Chris, or Thomas, I'm going to have you look up a group of stocks. So we've got a few different in the drone category. So ONDS, Red Cat, and I think Redwire. I don't even know if that quite fits with the drones, but let's talk about those three: RDW, ONDS, and RCAT. Okay, look at those three, and then Chris, what are you looking at right now?
I am looking at SoFi.
Yes.
Well, so I know from doing the MarketBeat Monday that we have several people that have been saying that Thomas and I keep on saying that SoFi is a buy and it keeps going down. Well, I'm going to say it again. SoFi is a buy. And, this is one of those stocks that it keeps under promising, it keeps over delivering, and it keeps getting knocked down. I really, the stock from a technical standpoint, it looks oversold. I'm still going to say I believe the stock's a buy. I look at things like projected earnings growth of 103% for this year, and the stock is down 25% for the year. There's just some things that don't quite add up. It's trading about 33% below the analyst consensus target. There might be some concern about the valuation, but I think that really depends on what metric you use, because I guess if you look at the price to earnings, it's probably a little bit overvalued. But if you look at the price to sales, the price to book, it looks like it's trading in a pretty good range. Institutions are still buying the stock. Again, I'm just going to say it. I'll say it again. I think this is an opportunity for investors. I think it's in that area where it's in that fintech range. So people are trying to look at it as a bank, and it is a bank because it's got a bank charter, but I don't think it's truly a bank. And I think it's catching on very well with that cherished Gen Z consumer. Again, I'll say it again. I think SoFi is a buy, and I'm sure that people will tell me that I'm wrong.
No, right now in the comments in the chat, we're hearing people who are saying that they like SoFi too. One of the comments is that there's a lot of institutional buying in the last couple of weeks. And we do see that. We see a lot more institutional buying on this one than we do selling, although the total percentage of institutional ownership is still pretty low, less than 40%. But there has been some recent buying.
Yeah. And again, I think this is a stock that it's kind of, this stock's now got a market cap of over $23 billion, which doesn't make it a mega cap company, but it's not a small company anymore. And I think that it's not going to have the price action that it did, 4 or 5 years ago when it was bouncing around like a yo-yo. But again, I think the stock is it looks to me to be clearly oversold right now. And there's just nothing about what the company's been delivering with their earnings report that tells me it should be trading as low as it is.
Yeah. We did get one comment from Michael. He says he does think SoFi will drop a little bit more. So we'll see. It's been on this downtrend for a while, and it's a name that comes up almost every single week. People are really interested in SoFi. So
exactly. Yeah.
Yeah. All right. Chris, I'm going to have you look at the question we had earlier on, and I missed it.
Okay.
Wanting to talk about the memory stocks that are doing so well, SanDisk, Western Union, but there was another name. It was
Pure Storage.
Pure Storage. So take a look at Pure Storage and see how it compares
will.
to those other memory stock names.
Sure.
I want you to look into that next. Thomas, let's get back to the stocks that you were looking at. And I know I gave you quite a few all at
Right.
once.
So Ondas and Red Cat are more closely aligned. They are both making drones. They're getting traction with defense contractors domestically and abroad. Revenues ramping, on track for profitability, and analysts are all pretty bullish on both these companies. We're looking at 70 to 85% upside at the consensus, with trends pointing to the high end. So right now, I think we're really just in this wait and see phase, where we're waiting to see if the upcoming results will be as strong and affirm the growth outlook that's been developing. Ondas reports middle of next month. I think RCAT's probably pretty similar. They recently reported, so their report's going to be out in July. So November 13th. This is weird. This isn't showing up right. So they're either getting ready to report real soon, or it just came out. It's not showing up here. But just looking for these results to affirm the outlook. So long as the outlook is affirmed, any pullback in price action is going to be a buying opportunity. If we, for some reason, get a breakdown in the outlook because the technology isn't working, that will change things. But right now, both these companies appear to be gaining traction. Follow-on orders are affirming the business technology. So like I said, just a matter of time for them to grow into their outlook and have the stock prices follow suit. As far as Redwire goes, this is a different company, still kind of tangential, but they're making components for space and for the space program, space vehicles, spacecraft, and satellites. They've got a lot of new contracts. Their business is also expected to grow. They're tracking towards profitability as well. This year is supposed to be an inflection for the entire space industry because of SpaceX. The SpaceX IPO, if and when it happens, is expected to just unleash all kinds of investment into space. So Red Cat will benefit from that. Redwire will benefit from that. So that's just another matter of time thing, just waiting for business to kind of grow into what the outlook is.
That's right. I forgot that that's a space stock, not as much a drone stock. Thanks for giving a quick look at that one. The next quick look I'm going to give you two at the same time too is AMPX and PATH, PATH. You can look at both of those next, Thomas. All right, Chris, which one are you looking at again?
Pure Storage.
That's right.
So yeah, so you were asking me about Pure Storage and how it relates with other of the memory companies,
right?
And I think that's a good place to start, Bridget, because I think it's important for investors to know that Pure Storage isn't a pure play on the memory area like you might see with other companies like SanDisk or others. What Pure Storage is they're a data infrastructure platform, and they leverage cheap flash technology, cheap meaning inexpensive, not cheap in the other way, but to deliver. So they've got a recurring software like business model. So it's kind of that economics is very favorable for them. What I'm looking at here is the stock doesn't really look oversold or overbought. It's kind of neutral right now in the stock, and the stock doesn't seem to be showing a lot of volatility. The thing I like about the company is they've been growing revenue and earnings steadily. That's expected to continue in the next 12 months. In fact, the comps are pretty easy over the next 4 quarters than they were over these 4 quarters. This looks like a company that, you might not be seeing, you might not see the meteoric growth, but certainly it's trading about almost 30% below the consensus target. So this is one that you could get in and it could grind up higher for you. Again, I think the comps are pretty easy for next year in terms of revenue and earnings, which is very favorable for investors. This looks like a good one for investors to get in on. They report earnings, just so investors know. I just was looking at that. They report earnings
next week. It
looks like February 25th. It looks like, so a week from Wednesday.
Yes, and just because I have we want the comparison here. You said it's not a pure play like these other stocks that really have
Right.
had meteoric growth. I mean, just SanDisk is the perfect example of a company that
Yes.
just skyrocketed this year. We see Western Digital, same story, up over 300% in the last year. Is the same demand that's making these companies go crazy right now? Does Pure Storage have that same demand in the same field, or is it a really, really different kind of demand?
I think it's a very different kind of demand that they're seeing. And again, I think it's the idea that AI is going to require storage, fast retrieval pipelines, a scalable architecture. That's the lane that Pure Storage is playing in. It's not doing exactly what SanDisk and some of these other companies are doing.
All right, good. All right, Chris, the last stock I'm going to have you look at today because it came up and we haven't heard of it on MarketBeat Monday. Wendy's. You talk about McDonald's a lot, so I want you to look at Wendy's.
Okay.
All right, Thomas, why don't you give us AMPX first?
Right. So Amprius Technologies, this is the same story we've been talking about. We're in wait and see mode for the next earnings report due out the end of next month. But that being said, the story has not changed. We're still in the process of ramping production, ramping sales, ramping capacity, ramping orders, all supporting this hyper growth outlook. So that being said, this next result should affirm that outlook, should keep the stock price, in gear, if not moving up, in a straight line, at least ratcheting higher, channeling higher the way that it has been. Right now, we're down at the bottom of the channel. Looks like a good time to buy. Within this consolidation phase, certainly expect to see this stock price, retesting the $15 level pretty soon, and then potentially breaking to new highs after the release. As far as the analyst goes, they're still pretty bullish, still leading to an above consensus price target above that $15 level. So again, we just need that catalyst to come. Probably going to be in the next earnings report. The other stock you asked about was UiPath. UiPath is a company that's just ahead of its time. They were incorporating agentic AI capability with automated business services for years before AI became this thing. Enterprise has not really leaned into it as hard as we thought they would quite as quickly, but still very well positioned to benefit from this trend. I think over time, this stock has potential to rebound. It's just a matter of seeing it in the results and getting the market invigorated and wanting to buy the stock. Looking at the analysts, they're rating it a hold. They see 40% upside. But again, we just need something to kind of get them invigorated and more excited about the name to kind of attract, retail traders. But other than that, I mean, I think it's a good company and a good stock. It just needs that catalyst.
Good. And I thought I wanted to ask one more. Plug Power is the other one I want you to look at for your last stock, Thomas. PLUG. Take a look at that one really quick, and that'll be the last one to talk about. Chris, you are looking at Wendy's. I love it when we talk about something new, and this is a new one for the show anyway.
Yeah. So big fan of Wendy's for a story that goes back to my son and I during COVID when it came in clutch for us. But I wish I could have the same bright outlook for the stock. I'm kind of neutral on it. This could be a case of a stock that might be a better trade than it is a long-term hold. It is giving off that so bad it's kind of good vibe right now. Just reported earnings last week. The earnings weren't. They were better. They came in better than expected on earnings. They were a little light on revenue. The problem is that they've been down on revenue for the last several quarters. They're not guiding to very strong revenue for this year. I know this has been a company that's been closing a lot of stores. They're trying to get back, they're trying to generate some profitability that way, that addition through subtraction sort of thing. Again, I look at the company. I think it's kind of it's so bad. It might be good as far as a trade goes. I can't believe I can't believe the stock's under $10 a share. And if you believe in the long-term outlook for it, the company does pay because the stock price is so low, the dividend is yielding 7.49%. and the payout ratio is 65%, which is a little high, but not unsustainable. So it's one of those stocks that if you believe in it and you think it can turn around, it's going to pay you. It's going to pay you to hold it. But I wish I could be a little bit more enthusiastic about it. But that earnings report last week didn't give me a lot of hope.
Yeah, it's a good look at it. The one thing I wanted to show is that Q3 institutions were selling much more than they were buying. There was quite a bit of institutional sell-off. Not as
but
much
then they started coming back. Then I noticed that too, Bridget. They were selling pretty heavily in the third quarter, but they were coming back a little bit in the fourth quarter where buyers outnumbered sellers. So, again, I looked at and really quickly, I didn't dig really deeply into it, but that fourth quarter earnings report, I'm not sure I see where the growth is coming from. But if you're willing to hold the stock for any length of time and you kind of believe in the story, it is paying you to wait, and that dividend yield's pretty nice right now.
A pretty nice dividend. Nobody asked for it, but you told me about McDonald's when we were talking last week, and the fact that McDonald's had a 6% boost kind of out of nowhere in the last few days.
Yeah, exactly. And Wendy's has not.
And Wendy's has not. The charts do look.
I think Bridget, I think that's actually a very good point, because I think it's really contrasting the two, because I believe McDonald's reported on the same day as Wendy's is, and the market's clearly voting. And in the short term, it's a voting machine, and the investors like McDonald's, they don't like Wendy's. But again, Wendy's is one of those stocks that I'm looking at and saying it could be a so bad it's good,
right?
It's good situation, but it might be a better trade than a long-term hold.
I think Wendy's reports this week. One thing with them is they're having some management issues, and they admitted to some self-inflicted wounds over the last year, and they've lost market share, and you can see that in McDonald's results and in Burger King. Other people they're not doing that bad. Wendy's is doing horrible. Yeah,
and they've closed a lot. Like I said, they did report last week, Thomas. They reported.
Oh, did they?
Yeah, same day as McDonald's, I believe. And again, the earnings were a little bit up, revenue was a little bit down, but the revenue story has been just going down. It's been a same story and I agree with you, Thomas. It's been execution errors. Again, the stock may be so bad that it's good right now, but I wouldn't have any conviction holding it long term. But
so bad that it's good is not always the best thing to hear about a stock you might own right now. So thanks for bringing up Wendy's. Again, it's fun to talk about stocks we haven't talked about in a while on the channel. We are going to do one more name. There's so many I wish I could get to, but Plug is one that somebody mentioned early on that I wanted to get to. So let's get to it quick, Thomas.
So Plug Power, interesting story. They're advancing their technology. They're deep into building a lot of projects. They're basically in the transition point of reaching this critical mass where they're going to start having really more viable business. But they're not expecting free cash flow until next year, late at the earliest. Real profits aren't going to come for another year or two after that. And between then and now, the company's going to need a lot more money because they've been burning money. Over the last year, the share count increased by a high double-digit amount. We have real dilution as a problem. I don't think that's going to end anytime soon. So right now, I'd be very leery about buying this stock simply for that fact.
Really quick, what is Plug? I mean, the energy story has been so huge with AI data centers. If you didn't watch a video, we just had a new video come out talking about energy stocks yesterday on the channel. So go back and watch that if you haven't seen that full video yet. But Plug didn't come up. What makes this a unique solution for energy?
Well, they make hydrogen fuel cells, but more importantly, they're really having to build the entire hydrogen ecosystem. Like, where does hydrogen come from? How does it get stored? How does it get transported? How do the end users actually get it? And then who's going to be using it? So there are uses for it, but for them to actually get that business up and running, they've got to create the entire industry. And that's what's costing so much money. So lots of execution risk, lots of capital risk. And so plenty of headwinds for the stock price.
All right, very good, guys. Thank you both so much for your time today. We went a full hour today. I see a couple people that just asked about SMCI. We'll have to start with that next time. Sorry we missed it. Thank you all so much for joining us for Market Beat Monday. I hope you enjoyed our cold look at a lot of different stocks. We're here almost every Monday for Market Beat Monday. I am going to be out of town next week, so we're going to pause Market Beat Monday next week, but we'll start up again the next week again after that. So thanks again for joining us, everyone. We'll see you back here on Market Beat Monday in just a couple of weeks.